So, all right, welcome guys. Good evening. Welcome back, guys. Good evening. How was your day? Um, I think it is a very, very funny day, right? Because we have been waiting for the highest expansion of this week, right? So, unknowingly, today has the highest expansion of the week, right? That is, we are looking for the candle that has the highest expansion on the daily time frame, on the daily, in terms of what a weekly price delivery. So it's clearly saying that today has given us the which is Thursday, has given us the highest expansion of the week, which deliver price excessively lower. Why? Uh, it is very, very interesting to say that uh, with the current market delivery, they are giving us, the algorithm is actually presenting us an opportunity to get in on a daily discount, right? Because if you look at here to here, this is the discount price. We just get below the 50% region. This line actually is the 50% region. We just get below it. And right. And if you look at this, we have this as our daily bullish order block, which is this consequent order block that tap inside this inversion fair value gap and rally higher. So if we want to use that analogy to um, if we want to use that analogy to come into conclusion about what the market is actually delivering, I think we have to say that with the current price delivery for today, it is actually we're actually going to see the market sit down, or this other block will be the actual support, not this fair or this gap, uh, this weekly gap. So we are looking forward for this consecutive down close candle to be a support. Which when we go on a lower time frame, I have refined it. So I have refined it on a lower time frame, and it is clearly showing on the 4 hours. So I'm going to go with that 4 hourly candle. So so not to waste our time, I will just dive into what we have today. So what you are seeing currently is the daily contract for Euro US dollar. That is the Euro US dollar daily contract for Thursday, 14th of March, 2024. All right. So I have this statement here which I want to read for you guys. So the Euro US dollar daily contract for Thursday, 14th March 2024 deliver a large expansion lower, which also give the highest expansion of the week. Now leading euro to price into the discount price. Now I am very pleased to see euro price rally lower as projected or anticipated from the beginning of this week, which also giving us the confirmation that the algorithm is giving us an opportunity to participate at a low risk buy zone, that is at a discount what price. Now what I'm saying is that the current price delivery for today is giving us the confirmation that the algorithm is actually giving us opportunity to engage at a low discount price. Now, let's for example now many traders says that trading is a game of probability. Well, I will not cancel that, but I think if you have an edge now, you will be able to be at more higher probability. Your edge will keep you above uh you know above some certain your edge will give you certain confirmation about price, which your edge will keep you above every other um curriculum, meaning that your edge will makes you to have more insight and will give you the, let me see, 70% and above. All right, depending. So now, with current price delivery, this is actually giving us 70% vibes. So if we participate and it actually did not, give us the opportunity, or it goes against us, that is the risk we should all be aware about. And also, we don't want to see market price below the consequent encroachment of this candle, which I am going to mark out now, and I am going to delete these two line. All right, so as to make the clarification, as to give the price clarification. So as I stated earlier, I have just marked out this this is the consequent encroachment. This, that is the difference between this high and this low. So this is the consequent encroachment. If this is going to be effective, we don't want to see price go below the consequent encroachment of this fair value gap, of this bullish order block. So that is what I'm anticipating for that. Now, with the current price move, it's showing clearly that euro is still interested in going lower, right? Which is a very pleasing move. But I want to see the price move begin to slow down. We are going to go down, but I want to see it slow down. I don't want to see it keep moving impulsively as we are getting towards the PDRA. That is some. Oh my God! Sorry. I have just, if euro find its way lower into the daily discount bullish proportion block tomorrow or next week, I will be anticipating for that PDRA to be effective and deliver price higher, and to lead in change of what state of what delivery in price. Now I am anticipating for tomorrow candle to refill the inefficiency created in today price, so as to give us a good market feel. Now that is tomorrow. I want to see us price higher, maybe late tomorrow or early tomorrow, price higher, and give us a consecutive what price range, so that next week, if this is going to be effective, it is actually going to give us a good move. Right, so that is very important to add to price. So that has bring us to the daily market review on the XY. So from the daily contract on the XY, we can see very clearly that the SY, like as I have called out before, the SY has eventually delivered impulsively into that fair value gap, which is the daily fair value gap, and also below this above, sorry, and also above this opening price. All right, I am marking all this out. Go into your chart, you will definitely see all this. Now look at this series of what bearish order block on the daily time frame. So I am anticipating that because of how we move into this fair value gap, we are actually going to keep price tomorrow should lead price lower. Then we going to reprice higher and tap on this bearish order block. Then we are going to move lower if this, only if and only if this bearish order block is effective. You understand? So that does not mean if and only if it is effective, it should lead us to lead price to go lower. All right. So this is a very, I think it's a very good observation, and I don't know if you follow me every day, you see that I've been calling out this market each and every tips. Today did I trade? And today has the highest expansion. I did not trade. One, because I I did not feel bad missing this today move. Why? Because there are so many things which is not in my entry model that did not come up. So I do not engage in price today because I did not see a reason why. And although there is a news event that lead, which is consumer price index, I don't know, but it's not the main CPI. Sha. So it is very important that when you don't have a particular edge, or when you don't see a reason why price move, you should not be afraid of missing it. As long as you still have tomorrow, you still have next tomorrow, you still have next week, you still even have next month. So that's just it. If you are new, like when I was new, you feel like, oh my god, this thing just moved. without me, and your mind will be telling you you could have been in that move. But that is a wrong impression, because you would if you are sincere with yourself, you did not see reason why you could have been in that move, and that is what is very important to you. So this has brought us to the 4 hourly contract on Euro US dollar. So the Euro US dollar 4 hourly contract shows nicely how price deliver impossibly lower in today trading or in today pricing. Now on the 4 hour, we can see that price rally impossibly lower, sweeping the previous day low and Tuesday low as well, which is today sell side, which is the sell side liquidity that has been swept today on euro, and rally into the what areas of interest as anticipated. Now that is, we rally into the area of interest as we have called out before, and as we have uh, keep our notice on price on that area. Now, from the 4 hour, the daily bullish order block can be further refined into a 4 hour candle that lead to the change of delivery in price. Can be further what refined. Sorry, I write something different from here. Refined. So can be further refined into a 4 hour candle that lead to the change of state in delivery of price. So I am anticipating for price to also use this candle to engineer higher price delivery. Now look, there's something that is very interesting on this 4 hourly candle. You look, this 4 hourly candle will deliver high. So it is the candle that has the low of this whole move. The low, it is lower than this and also higher than this, all right, and also lower than this. So which it is the candle that the last highest down close candle before price begins to move higher. So I am anticipating for market to respect that area. And also if you measure here to here, the consequent encroachment is just a little bit below this daily consequent encroachment. So I am leaving the daily consequent encroachment. So now you understand. I want to see, let me just put a part two. So imagine if you get into this price, your stop should be a little bit below somewhere here, the consequent encroachment, or you can actually expand to here. Why? Because if this is effective, we are not supposed to see the market go below this consequent encroachment. So rather we should respect this consequent encroachment. All right. So that is very important to see. I will be pleased I will be pleased if tomorrow price rally higher, filling in some of the what inefficiency in today price rally, so as to keep next week price in line with the anticipated move. What did I say? Now let me delete this. I just use it to explain something. Now what I'm saying is that I would be pleased if tomorrow price refill this fair value gap, which is a CB, so as to what keep us keep the market condition in favor of our anticipated move going in next week. So if we refill this area, then we are going to next week Monday should give us a low, then the Tuesday should tap into this area and show us a willingness to go higher. Then Wednesday we kickstart it, then Tuesday, Thursday we add to it, and Friday might just retrace back into the move. So that is just an anticipated move. That does not mean that it has to go in line with everything. Then if tomorrow also go into this area, that will also set us a leg to show that there is still what a weekly fair value gap, but that fair value gap will be very tight. So if there is a weekly fair value gap, and a tight one, then if markets get to that fair value gap, it is also going to give us what more confluence to this PDRA. All right, that is very also, that's also very important. You know that you have that also in your chart. I have deleted so many things like the 4 hour bullish order block. Those are the questions how I'm expecting that. Why do you delete some things? One, if I deleted any PDRA I have marked out, is because the it has been it has been rejected or it was not effective. So this was not effective, as the daily discount price is more interested, like the market is more interested on the daily discount price. All right, we can also see that this is effective because it lead to the exchange of state delivery, lead to the price, lead the market to price higher, but it is not that effective to what, to lead us above the what, the draw on liquidity, so as market price lower. So I will try to be a little bit faster as time is not on our end. Now, if you see, same thing has happened. We did not respect this area of interest and markets rally impulsively. Look at this one candle. This is news. All right. And also, we have this volume here, and also this consequent down close candle is the bearish order block on the daily time frame. So we are looking towards this area, so I'm going to take this off now. So we are looking towards this area as our areas of interest going in next week, and tomorrow I'm anticipating for us to at least come lower and fill this void. All right, so Monday we can go higher. Tuesday we're going to use that day to engineer lower price delivery. So that has led us to the hourly contract on Euro US dollar. So the Euro US dollar hourly contract or 60-minute contract shows nicely the intraday price delivery for Thursday, 14th March of 2024. Now the daily profile is an obvious 6 o'clock AM New York local time as the high of the day that just priced a little above the opening price in New York open. Now that means the New York opening price. Now the low of the day is formed at 3 o'clock PM New York local time that price into the weekly efficiency. Now on the 4 hourly contract, we can see how price delivered leaving series of what, sorry, on the hourly contract we can see how price delivered leaving series of untapped fair value gap above the current market, which is subjected to be filled tomorrow if euro find its way higher. What I'm trying to say is that you see there is a fair value gap here, a fair value gap here, a fair value gap here, and also a fair value gap here. That is how many? One, two, three, four. That is series of what? Fair value gap that remain untapped. So going in tomorrow, I want to see us, price higher and refill some of these fair value gap before we actually give us lower prices. Now, the one that I'm looking to be more effective is this two upper one, two. So this one is just I'm not situated on this. So if you have all this confluence in at the back of your mind, that should give you an edge. All right, this is an edge in going into this market. So with the current price move, it's showing clearly that euro is still interested in going lower, which is a very pleasing move. But I want to see the price move begin what to show to slow down as we are getting towards the PDRs. That's what I mistakenly read on the daily time frame. What I'm saying is that we see how impulsively we deliver lower, but now I am anticipating that if this move is should be effective, I want to see the market slow down. We are going to slow down and get into this area, because if we continue to move like this, that is a sign. All right, that's what I'm saying, that you need to learn the signature of price. If we continue to move like this, that is a sign that we are going to come for this liquidity. You can see there is a series of equal lows here. Why I'm not, that's a sell side liquidity. You can see that is really showing. I put this on my price on an hourly candle to show it. All right, so there is a series of liquidity below this price. So if we continue, that is a signature in price that we are going to disrespect this area. All right, so if we slow down and we move towards this area, then that is another signature that it is kind of effective. So you need to see how market is moving. All right, if you moving with speed, knows that there is a danger. All right, it will not just stop once and start to reverse back. So also this is the contract for the 4 hourly contract for sorry, the hourly contract for DXY, and also same thing is showing here. So we want to see market reduce the speed of price delivery towards this area. And I don't have much to say about this DXY because it's almost possibly the same thing. So if you enjoy this video, please subscribe to this channel. Please and please subscribe to my channel. Okay, that's the only way you can support me. So have a nice day and see you tomorrow.